I'll move this to the side here. Can everybody see my screen?
Yes.
Okay.
Yes, we can.
All right, so I'm going to start off. I'm going to start off with Velocity Banking. And again, please raise your hand because I can't hear if y'all, I can't know if y'all hear me or not. As a matter of fact, let me open up my chat here so I can see if somebody sent something. All right, so I have several people on here that called me about Velocity Banking. I have several people that called me about credit repair, and I have several people that called me about real estate investing. And congratulations to my two partners. They just took down two properties this week, Monday. I already started working on the repair today. That's why I got cramps in all my fingers and toes. Rosie. Oh, hey, Rosie.
I'm on the phone. I'm in here. What you saying? What you saying? I'm busy. You busy.
Hey, Sabor, thank you.
No problem. So Rosie and Net, they took down two properties for the price of one. They've got two properties for 40K off of what were they? A hedge fund company, right? That was buying commercial notes, and they ended up having two residential notes in there that they didn't want. So they sold them at a very deep discount. And Rosie found the deal. I didn't find the deal. She found the deal and she brought it to me, and we all went in together. They bought the property in their own names, and I'm doing the rehab at my cost. And we'll split the cash flow after the rehab is done and we sell the property. So congratulations for taking that jump, because a lot of people don't know how to jump. So I just want to say that to you. Asha, you next.
Yes, I am. Excited.
All right, so let's go ahead and jump into this real fast. So first of all, why do I do this? I have a passion to help people grow and break the bonds of generational ignorance and financial ignorance. A lot of times people don't realize there are easy ways to manage and move forward in life. So this is a strategy that many people on the call, Rodney, Brandon, several other people that I have in my Velocity Banking group, they're not on the calls yet, but they all have implemented this into their personal lives and also in their businesses. It sounds weird, but there's a method to the madness, and you're going to see what I'm talking about. Somebody's muted.
Yeah, I'm on call, Al.
Okay, got you. All right, so Velocity Banking. What is Velocity Banking? Velocity Banking is using debt to pay off debt. Take notes. Velocity Banking is to use debt to pay off debt. Now that sounds crazy. So the way that we use Velocity Banking in our world, we're going to use 4 different methods. You can use a credit card. Sorry, got cramps. Credit card, a HELOC. Anybody know what a HELOC is?
Is that a home line?
Home equity line of credit. Okay, so you know what a HELOC is. What is this? HELOC.
Business line of credit,
And PLOC.
personal
Line of credit.
line of credit.
Okay, so why do we use a line of credit versus getting a loan from a bank?
Lower interest rate.
Amortization schedule. So a loan comes with an amortization schedule, just like you pay on your house, your car, or whatever. You cannot use that money. You cannot pay that money, call the bank and say, hey, I made a mistake. Can I please get back that money? That's why we call amortization schedule the devil. On our side, we call it the devil, because you can't use those funds over again once I make that payment. Now, with a credit card, a HELOC, BLOC, and personal line of credit, once I pay that debt, I can use that money over again, okay? So this is how you boss up. This is how we teach people to level up on the Velocity Banking side. So I'm gonna jump down here to a case study because we had a brother that was nice enough to give me his income and show, so I can show you better than I can tell you. Okay, so his income monthly between him and his wife is $4,200. Their expenses is $2,800. That's including their bills and rent, but they also have some occurring debt. That's right now, they have an Amex card that's $1,200. They have a minimum payment of $35. They have a Capital One card with the $1,600 balance. I think that's balance. Yeah, that's the balances. The $1,200 and $1,600 balance with a minimum payment of $35 a month. Plus they have a car payment, okay? So if we take all that and add it up, they actually have left over almost $1,100 here highlighted. Now, in most cases, people have $4,200 going in, $4,200 going out. That's not including food and all those type of expenses, right? So this is where velocity banking comes into play. Now, my mindset in velocity banking, and I'm sure people on here can attest to this, with velocity banking, this is a lesson for everybody to write down. With a credit card, with a BLOC, with a PLOC, you're able to use those funds over again. And you're going to pay off your debt at accelerated rate. What I mean is, so now this expense is no longer being paid out of my checking account. This expense are no longer being paid out of my checking account. I'm going to link all my bills to my credit card, my HELOC, my PLOC or BLOC, any kind of line of credit, anything that's revolving. We want something that's revolving. I pay, can use again, pay, use again, pay, use again. Okay? Make sense? All right, so I got 3 screens, so if you see my eyes while I'm darting around, I'm looking at 3 different screens. All right, so he also had almost $3,400 in savings. With a savings, an income, in debt, he don't need that, okay? First thing he wants to do is take that savings, pay off all these cards. So if he take, pull up my calculator here. I want everybody to see what I'm doing. So if he takes the $1,200 plus the $1,600 and minus or pay off that, he owes $2,800. He has that right here in his savings. He pays off those 2 cards, then he can just start focusing on, so when he pays off those 2 cards, he owes $35.35. That's going to add to his cash flow. So, and I know more people have more debt than this average, but he's been with me for a while, so that's why I asked him to give me his case study. But I think when he first started, I think he was close to $15,000 or $16,000 in debt. So, and that was, yeah, he had a large, and you know, that's average. Most people are $20,000, $30,000 in debt on credit card bills and other expenses. So, but anyways, he has that plus 35 now, plus 35 now. So now he has a cash flow of 11.5. He still has a car payment. I'm not sure his balance is on his car remaining, but let's just say that it was $12,000, which is average for most people. They do a 5-year loan, right? I'm sorry, just put 12. So what I'm going to do is now we're going to tack this 12K that he owes. So with tacking that 12K, he has monthly cash flow again. He has 11.5. Let's just put 11. Let's just round it off. All right, so now he has this to attack that, okay? Makes sense? His credit card balances are back to 0 now. So out of his credit card, let's say he has on this card, he has 5,000 available credit. And on the other card, he has 3,000 available credit. He has this cash flow after paying his monthly, his income comes in, his bills comes in. If I'm losing anybody, please let me know, because I know I didn't write this out good. His income comes in, his expenses come out. This is how much he has left. So now he's going to tack this, but how he is going to tack it. Remember, again, Velocity Banking is using debt to pay down debt. So what I'm going to do is I'm going to take his credit card, and I'm also going to take both his credit card, add them together. In the credit world, this is called available credit. You cannot go over 30% of your utilization in Velocity and in the credit world, or your credit score is going to take. Anything that's over 30%, your credit score will go down. The credit score is made up of payment history, utilization, meaning how much available credit you have versus how many you have, collections, age of accounts, and inquiries. So those 5 things make up your credit score, okay? So now we know that he has 13,000 in available credit. So we're going to times that by 30%. That says that he is allowed to use 3,900 of that before his score goes down, okay? So what we're going to do is so he has $1,200. So what we're going to do is going to take $3,900 from his credit card. Again, we're paying debt to pay down debt. So he's going to take $3,900 from his credit card and drop it on principal only. You can make a principal only payment. So you take principal only and drop it. Okay. I'll put this down because it's going to come back to it. So now his payment went down by 8,000. Okay. Now he still has to pay back that $3,900, right, to the bank. So let me put this down here first before I move on. So 8,100 he owes still. That's this remaining now. I can't type right now. Oh, here you go. Remaining. So yeah, this is his remaining car payment now. Car balance, I should say. So now he owes 8 there, but we have to pay this. Okay. Now remember, on his credit card, all he has to do is pay his minimum balance on the 39. But we're not going to do that. So what we're going to do is, remember, his cash flow after his expenses is 1,100. Okay. So now he's still going to make the 246 the next month come out of the car payment, but he's also, so we taking the 240 out of the 1,150, the 246 out of 1,150. So he's going to pay back to his card the $900, the remaining. Okay. Now, what does that do for this? How many months does it take to pay back 3,900 divided by 900? 4 months he paid back that. Okay. So now what we're going to do is rinse and repeat. After the 4 months, we're going to take another. So now his payment has went down with the 246 for the 4 months that we use. So let's say now that he owes 77,000. Okay. So now what we're going to do is we're going to pay. So I put that too much. 7,700. So now what we're going to do is take the 7,700, and we're going to take 3,900. And please let me know if I'm losing anybody. 3,900, and then we're going to pay from the credit card again. You can liquidate your credit card from you, and then now he owes remaining balance is going to be 3,800. Right? Again, that's the remaining. And again, he's going to pay back his card in 4 months. He's paid back his card in 4 months, okay, with the 900. And I'm just going to do something like this, 900 in 4 months. He paid back his card. Now, what happens when he gets to, so that's 8 months. Normally, he's been paying that car payment for 5 years, 3 years, 2 years. whatever he had remaining, he would be still making those car payments. He basically paid off his car because now he don't have to drop 39, because remember, he's been making 4 months of payments here. So now it's probably like 36,000. Let's say 36,000 now that he owes on that. So all he has to drop is 36. He only need to take 36 from his card now. So that means his utilization went down by 25% instead of taking out 30% of his utilization. Now, the goal in Velocity Banking, remember, it was 4 months in between to pay back the 900 to the 3,900, okay? After all his expenses, he still had that cash flow. Now, the goal in Velocity Banking is to ask for a credit line increase every 3 months. So say after he made his third payment back to them, he went back to the bank and they both gave him, say they gave him 8,000 and this one gave him 5,000 or 4,000, let's say 4,000. That increases his available credit, which means his utilization went lower. So instead of 30%, when he borrowed the next 3,900, he actually probably was at 20% of his utilization. But then remember, we took another term off here. So again, that was 3 months past. He asked for another credit line increase. So say they increased him from 8 to 12. And then the other card, let's say they gave him 8,000. Okay. Now he has $20,000 in available credit, and he only took 39 off of it. That's going to give him a utilization of 12 to 15%. His score shoots up. The correlation of Velocity Banking, the correlation of credit. Okay. So that's how those two work. Remember, credit is payment history. So he made all his payments on time. He stayed under his utilization because he never went up to 30%. He actually ended up paying off this car loan in a matter of 10 to 11 months, and not 5 years, 4 years, 2 years. He paid it off in 11 months. Make sense? Now, the goal is always for us as investors, as people, is to buy performing assets. So now he has his income. Remember, his car payment was $246. So his cash flow originally was, and I got it way over here, was 10. It was like almost 1,100. It was like 1084. So I'm gonna put 1,100. His cash flow was 1,100. His cash flow increased now because he don't have that car payment. Plus he don't have to pay his credit card again. So his cash flow actually increased there. Okay. Now I'm taking questions on this because I know I'm going fast and I want people to see the power of Velocity Banking before I move on to the next part. So anybody have a question about this? So his cash flow actually increased by $1,300, almost $1,400 now. He's no longer in the red.
I have a question.
Mhm.
So basically what we're doing is taking the cash advance on our credit cards.
There's different ways you can liquidate your credit cards. For those on here that's business owners know, you can write an invoice to yourself from PayPal and pay the invoice. You can liquidate by doing Cash App to a friend and taking it out. Or you can do what is a balance transfer directly to your checking account. Depends on what card you have. Discover is one of my best cards because I use it for all my rehabs and stuff like that when I need extra cash flow that I can't get out of Lowe's, as you know. So what I'll do is there's a little Discover. If you go to the balance transfer section under service, you can transfer at 0% for 12 months. But there's a cost of 3% to process it, or you can take the 3% up front and then they'll charge you. I think it's opposite, it's backwards though. So now, any other questions about Velocity Banking? Because I know I went through it fast, but again, your goal is to take your available debt and know. But the main thing is you have to know your cash flow. Your cash flow is how much money you have left over after your expenses. So you're paying all your debt down off of your cash flow. So if I make $500 and I owe, my cash flow is $500, right? And I owe let's say 5,000, I know it's going to take me automatically 10 months to pay off that 5,000. Okay. Now it does take discipline. It does take maneuvering. The main thing is the first thing, and Rodney, are you there? Thompson? So he can't talk. He's driving. So the main thing.
No, I can talk. I can
Okay,
talk. Can you hear me?
What was the main thing when you started your Velocity banking journey that I told you to get rid of?
You said what was the main thing to get rid
Yeah,
of?
yeah.
Oh, the debit card.
You have to get rid of the debit card because people look at debit cards as cash and they utilize their debit card more than they use their credit card. So the debit card is actually going to,
Right.
you're going to reach for it. You're going to reach for it. So you have to get rid of the debit card and make sure you replace it with a high limit credit card. Okay. Now, how do we get high limit credit cards from the banks, or if you do not have a high limit credit card? First thing, if you have a low credit card around 1,500, 4,000, 3,000, then I already know that you did something wrong. And I'm gonna tell you what you need to be doing on all of your profiles right now on any credit card that you have. You go in, your income is going to be how much, Rodney?
I think I started at when we first started out was 120,000.
And I bumped
But I
up.
think, but I think you bumped us up to 250 now
So you should be,
because we're always increasing.
yeah. So you should be starting out at least 200,000 on your credit card. When you change your profile, say that you make $200,000 a year and your rent or mortgage is going to be $3,000. Okay. So when you do that, what the banks are going to look at you as being stable. Okay. Now, every 9 months, you need to go in there and increase your profile. Why? You're stagnant. If you don't show the banks that your income changed, why would they extend you more money after 9 months? You understand what I'm saying? So you always want to update. So you can do 10,000, 20,000, and every time you'll get increased. So your cards now with a $200,000 and $3,000 rent, when you apply for a card, remember, it's all stated income. You don't have to pull out no statements and show anybody anything or nothing like that. It's all stated income. Okay, it's unverifiable income. So once you put that on there, what they're going to do is when you apply for a card, and you want to make sure they're uniform on all your cards. I go through all my cards once a month, every 9 months, and change my profile and update my pay. So once you do that, what happens is you'll get higher credit line increases. But not only that, when you first apply for your card, when they ask for your annual income, you put that, you're getting a $20,000, $30,000, $40,000 card, depending on the max out number of the card. Okay, so now you have 10 cards, just say you have 10 cards. And now I think right now I'm at 240,000 on personal available credit, but my utilization says 0. Even if I use, I used like 5,000 to buy my daughter something, and my utilization is still at 4%. You know, so that's our goal. That's how we boss up. That's how we level up. But remember, again, you have that utilization, but now we have to get out of the consumer mindset because most people want to buy stuff. Okay, so the real estate investors on here knows you liquidate a credit card, use it as a down payment. You liquidate a credit card or use it as a means to rehab your properties. Now you have a cash flowing asset in the house. Okay, so now let's say, for example, our cash flow increased. Our cash flow increased by 36. It's increased by 1,300, right? So let's say that we get a cash flowing property that's paying us $1,000 a month. Okay. So now we have a cash flowing property that pays us $1,000 a month. We took off our card, let's say 15K, we took off our card. But remember, now we're going to rinse and repeat. So we got 15K. Oh, sorry. And this is Rosie's fault, y'all. I've been up since 3:30 in the morning. I've been cutting grass and everything. So now we have a cash flowing property.
Sabor.
Oh, sorry, Sabor.
I know you told me come home and get a nap. I was like, ugh. And it It happened to be an accident.
We're praying for you, Sabor.
All right, so now we have a cash flowing asset, and it's we're getting $1,000 off that, which increases our cash flow. Okay, so now we got to so I'm gonna say 2,400. Just gonna round it up 2,400. Don't mind my equal sign because it don't really mean, but we're gonna say we got 2,400 in cash flow now. We have $15,000 in debt that we have to pay back the bank. But remember, we use the bank's money to buy our asset. We use the bank's money to rehab that property. So honestly, if you think about it, you took a property from the bank. Say you took your down. Say you bought a property $40,000. Your closing cost is going to cost you 10. You put 5,000 in rehab. Okay, so now that $40,000 property going to appraise for $80,000 or $60,000, $70,000. So you actually have a performing asset that actually have equity in there. Okay. So it's one or two things can happen here. You can wait a whole year to refinance to pay back that loan, or you can again continually with Velocity Banking. So now so we took 15 off, our cash flow increased. So 15 divided by 24, it takes us 6 months to pay back that 15K. Not 5 years, not 10 years, not 6 years or whatever, because normally most people and our mind thoughts always just make the minimum payment. So the power of Velocity Banking is using your cash flow and the bank's money to pay back their bank their own funds. Okay. So now I have paid back a loan in 6 months. What does that do to my credit score?
Yeah, it's gonna make your credit score go up.
It shoots all the way through the roof.
Shoot up. So I just have a question, Sabor.
Mhm.
Should I wait to the end?
No, please ask.
Okay, so I'm just a little bit confused, a little bit. So can you go back up to the top part of your example there?
Okay.
Okay, so where you're talking about where he has his monthly bills, rent, things that are not going to go away, right? You got your light bill, you got your cable bill, you have your rent, you have your heating bill, whatever, all of that is. So so with Velocity Banking, you're really going to put that on a credit card to pay?
Yes. Anything that you can pay, you don't have to have a debit. So, hey, Brad, can she hit Brandy? Tell her what you put.
Hey,
Tell them what you put on your. Tell them what you. Hi, I miss you. Tell them what you put on your credit cards. Some of the things you put on your credit card.
oh yes, I put all of our utilities, so our electric, our water, except for our gas, they wouldn't allow it, but our electric, our water, our internet, our we also have AT&T TV, put that on there. Our gym membership wouldn't allow us to do it, but I mean everything, every monthly expense that I could put on a credit card, I put on there.
So then you pay your credit card off every month?
So use
I
your cash
well, no,
flow.
I can't. I don't pay. For me, because we're paying that credit card off, it has a balance that supersedes our monthly expenses. So we dump all of our income on there. It pays down the credit card and our expenses. So whatever income we have, we put it on there, and then it brings the balance of the actual credit card down. So that's how we're paying it down faster.
How fast did you pay your credit card down and your debts down? I love this.
So we started out, I guess like in January, we started doing this. And we started out with, I guess maybe about $8,000 in debt. And now we're down to where we at? 38. We're at 38. And so we actually are going to be able to pay that off this month. So we are
4 months in.
Yep, 4 months in.
Velocity Banking works for us.
Okay. Any other questions?
No, that, I think that kind of, answers it. I mean, it's kind of clear, but it's not totally clear, but I think I got.
Okay, so Brandon, can I ask you to unmute yourself, please, sir?
Oh, absolutely,
Okay.
absolutely.
How, and I see, so how did velocity?
Sabor, can I ask
Yes.
one more question
Yes,
before
ma'am.
we move forward?
Mhm.
So I know you mentioned that we have to go to our profile, you said, and keep increasing the level of our income, correct?
Yes,
Did
ma'am.
you say every 3 months or every 9 months?
9 months, 9 months.
9 months.
Yeah. So
Okay.
most billing cycles, as far as Brandon, he works in Wells Fargo, he'll tell you, if they look,
Perfect.
they start looking every 9 months at people's credit profiles to see who they want
Okay.
to extend credit to. And basically it's like a pre-qualification. So every 9 months, you're thinking that you want to increase yourself too. So the banks will look at your growth. So you're like, why would I go to somebody and say, hey, can I get a loan increase, or can you extend me credit, but I don't show no growth.
Mm,
Okay? So you're thinking now no longer as a consumer, you're thinking now as a business, okay?
right.
A business are not going to give anybody nothing that don't show growth. You know?
So every 9 months, basically, we're going into our old profiles on the 3 credit bureaus accounts, increasing our income.
No,
No.
not the credit
What?
bureau's accounts. I apologize. Your credit
Okay.
cards, your
Oh.
your lines of credit.
Oh,
I'm not gonna say
okay.
your credit cards, but all your lines of credit, you want to go in and increase your income.
Got it.
Okay.
Okay.
So Brandon, how
Thank
did Velocity Banking work for you?
That's the best thing I ever witnessed. I'll be honest with you. So what Al was talking about, there's different ways of doing it. For me, I actually have a personal line of credit. So I don't use my credit card. I actually use a PLOC. And with the PLOC, it's pretty much like a bank account where it's revolving as well. So when I was introduced to it, I got a Ford F-150 and I still had like maybe 3 years left to pay on it. And I started implementing the Velocity Bank, and within 4 months, it was completely paid off. I'm like, wow, it's just the way how you use it. It's the best thing you can ever do. It sounds very confusing. Al would probably have to, or someone have to sit down and really look at it, because I was kind of skeptical at first. Like, it doesn't make sense. It just don't make sense. But once you really just go out there, take a faith leap out there and actually start doing it, and you see your balance start going down at a tremendous rate, and you're like, holy crap. So I'm actually doing it right now for my house, for my mortgage. And so for January and February, I paid more in 2 months than I did in 2 years, looking at going the traditional way. So in 2 months, I paid more down on my principal than I did in 2 years. So guys, it's true. It really works. It really does.
Thank you, bro.
No problem.
So again, this is teaching people how to boss up, and it's not for everybody. And I know it's just a strategy, but I tell you, this is a strategy that I used. I don't know, a lot of people here don't know my story, but I had a rough story and I had a rough start, but I made it through. We're up to how many doors we have now? Because you're 29 doors now. 29 doors now, because Rosie and Annette, we bought two properties together, and so we're working, and it works. Again, you take your cash flow, and just imagine. It's not all people pay me $1,000, but just imagine that we get 29 doors, and everybody paying me $1,000 a month. How much money I bring in? And that's not including my W-2s. And I broker notes. Most people know me as being the note broker. I've been doing this brokering notes for 17 years. Just closed on 10 deals today. I get funded Monday. So and Rosie's like, you asked me about that earlier. So those things alone continuously increases my income. So you want to bring in performing assets. You want to make yourself boss up. Okay. You want to make your finances boss up. When you do this, I'm telling you, you're going to pay off everything within a year or so. So my backstory of how I found this, when I was much bigger, I used to do private security for millionaires. And this young guy, he was 25. This dude had Aston Martins. He had a penthouse that was like worth $2-3 million. And I used to play chess, and they would all come try to beat me in chess. And he was like, I was like, man, can you please tell me what am I doing wrong? And he told me, bring me your bills. I brought me my bills. He said, okay. So, and at that time, I think we had close to 5,000 come in. And he said, okay, you have 5,000 going in, you have 5,000 go out. But our expenses monthly was only 3,200. So we had all that cash flow left over. And he showed me this. And I swear we paid off our debts in a year just by implementing this system. It would take you off that level, okay? And plus, there's a correlation with velocity banking and credit. Brandon, has your score increased?
Tremendously, man. It definitely did.
Rodney, did your score increase? He's talking to his wife. I see her. She's yelling at him. So everybody's score is going to increase because, again, you're paying down debt at accelerated rate. Your utilization is staying under 30% when you take the money off of the credit card to pay them. So your score is always going to increase every 3 months. You're asking for a credit line increase. So your available credit versus how much credit you uses go. So why did I make him get rid of his savings and pay it down to his card? Okay. The answer is, I'm pretty sure you probably would. The answer is there's no use for savings now. I have 240K in available credit. If my car crashed, I need to pay my deductible. I need to buy something. This is my savings right here. So what am I going to do if I had to say I had to take $10,000, right, off of my one of my cards just to pay something? I had a repair on my car or whatever. And I got a cash flow of $5,000 coming in with no debt. How many months is it going to take me to pay back $10,000? 2 months.
3 months.
You know what I mean? And on and on. Say if I had to take $20,000 out, it's going to take me 4 months, $30,000. It's going to take me 6 months to pay it back. So you always have money, okay? So with this.
Or I got a question. So basically, right? So, okay, you have an individual like me, right?
Mhm.
We work for a company, right? We're doing 401ks, we're putting all this money into all of this stuff, right? Because this is what we're told to do. Oh, put your money in this 401k. So when you retire, you'll have all this money. And so basically what you're saying is, okay, well, you don't really need to save that anymore. Take that money, right? Pay off, you put it for your cash flow so that you can use to pay down this debt and make that money available for you so that when you're doing this velocity banking, you won't need that savings.
I mean, honestly, it's going to be a lifeline. The velocity bank is your lifeline. Your available credit is your lifeline. Now, if your employer is giving you a match, I'm not going to say not to do that. You know what I'm saying? But anything over that match, I wouldn't do. Only reason why, especially you can't take the money out that you already have there, you're going to get hit with a whole bunch of penalties for early withdrawal. You know what I mean? But I wouldn't recommend people to put anything over. If you're getting a match, do your match. It's free money.
We don't max, and I'm putting like the bare minimum in because it's like, okay, my bills are more than what I can do right now. So
if you don't get a match, just think about it like this. If you don't get a match, okay, and you put money in and the market fluctuates. So 1 year you may make 9%, then it goes down the next year and you put in all that increase, say that whole year, you put $50, $200 to $5,000 in, right? And now you're stuck, it's stuck there. You could have took that same $5,000 down that you did on this deal Monday, like you did on Monday, bought 2 properties. And then now you have a cash flowing asset that's going to pay you $1,000 a month for the whole year. So say that year you only made 3% off your 5,000 that you have in there, right?
Right.
That's how much is 3% of 5,000?
Let's figure that out. Well, 10% of 5,000 is 500. So 3%.
You made 150.
150.
150. Thank you, Rosie.
You made 150 for the whole year when you could have been making $12,000. $12,000 for the whole year. So that's just again, that's how we are taught, even when it comes to real estate, we're taught as people to buy brick and mortar. Nobody tells us buy a cash flowing asset. And a cash flowing asset to me, because I know we have people in here that's, fixing flippers and stuff like that. But a cash flowing asset to me is something that's going to pay me monthly residual income. So that either going to be a rental or are we going to sell or finance the property?
So what happens, does it ever happen where when you're doing velocity banking, that they will just decrease your credit at any point? Does that ever happen?
No, no, but again, no, not really. I guess they can pull back credit. I've never seen anybody do it. I did lose, I lost 20,000 when COVID hit. I think the bank started scaling back, but they gave it right back to me like later on that year. But the only reason they took it away from me because I wasn't using that card at all. But honestly, I got so many cards, I don't even touch most of them, you know. I got like a stack of cards. I'm like in it.
Yeah,
So
I took a hit with COVID as well. That was just the banks themselves because they didn't know how operation was going to go. They were losing money as well. So they did cut back, but that wasn't because of the individual itself. That was actually the institution.
Okay.
Mhm.
No, I just asked that question because I do know sometimes credit cards will pull back your credit line, and if you're not using a particular credit card, they will just cut it, they will just close it.
mhm.
So you just, I don't, you don't want to be in a position, doing, I mean, I don't think they're going to close it because you're going to be constantly using the card. But I was just more concerned about actually like decreasing your credit amount.
So my goal for you, just personally, is because you have a business. My goal is for you next is to build business credit. So even if you don't use your credit cards and they close it down, you have so many different lines of credit. Because remember, a business credit card is not going to be on a personal level where they give you 10, 20,000. A business credit card normally start out about 25K up to 75K, depending on the length of your business and how much revenue you have coming in. So you get one business card that's giving you 75K. That's going to max out most of your cards that you're going to have anyway. And again, when you're applying for business credit, you're going to do 4 cards at one time at the same time. So, literally you have all 4 tabs open, and when you hit submit simultaneously on each one, so you get one credit pull, and you'll get different offers, 75K, 50K, 40K, 30K, so now you have business lines of credit. So with the right business line of credit card, they don't report to your personal. So even if I had debt on my personal, I do a balance transfer over from my personal to my business. Now my utilization looks like 0 because my business holds the debt, not me. And again, I'm like Jay-Z, I'm not a businessman, I am a businessman. You know what I'm saying? So you have to think about it like that. So, so that's the part that we'll get to later on, but I didn't want to confuse you on that, but that's my goal for you personally, because you have your LLC, you're establishing your LLC. A lot of people on here, several people on here actually have active LLCs that we spoke about before about building business credit. And that's what we want to go to. Brian, you over there listening, bro. Do you have any questions? I see you there. You call me every weekend. You better have a question.
I mean, I'm waiting my turn, man.
Oh, okay.
Yeah, man. The velocity banking stuff, man. Yeah, we spoke on that. So it sounds like you gotta do a little bit of budgeting. You gotta know what you got coming in, and you need to know what your expenses are, and you minus your expenses to let you know what your cash flow is for the month, right? And so I get a little confused though. So are you using like the money that you bring in for the month, like that your revenue to put on the card for the velocity banking? Or are you using the savings?
No, so the savings went from the jump. Automatic, any debt that you had. So say he had $20,000 in debt, but he had $5,000 sitting in savings. I'm like, dude, get rid of that savings, because as you do this, your cash flow is going to increase by the increase of asking for increases. Basically, your cash flow is going to increase by what they give you on your extended lines of credit. Okay, so if he has $20,000 in debt and we're about to jumpstart velocity banking, he has $5,000 sitting to the side, then by far, throw that $5,000 on there, okay? Now, but after his paid down his first round of debts, I think Brandy and a couple people do this, they'll take 3% of their income and put it automatically back into savings just as a cash reserve. So we always tell people take 2 to 3%. Once you pay down your first round of debts, and I'm saying first round of debts because your first round of debts should clear you personally now that you can start investing into businesses, start investing into real estate, start investing into cash flowing assets, okay? That's good debt. I'm talking about bad debt. So once your first round of debts are over with, then you can go ahead and start, saving again.
So all right, so once you pay your first round, for each round, you still want to put a certain percentage back into your savings.
Yes, 3%. So just say like your cash flow after you paying off all your personal debt increased. In this situation, I think their cash flow increased by $1,300 to say. So we're going to take 3% of that, okay? And we're going to put it in our savings. So you're going to take $39 to $100, just say $100, round it off every pay period or every whatever. No, we're doing it by paycheck, wasn't it, Brandy? You're doing it by paycheck, right?
Paycheck, yes.
Yeah, she's doing it by paycheck. So every time she get paid, she take 3% of her paycheck and put in her savings. So say she get paid bi-weekly, she'd do $100 per week bi-weekly. She's gonna have $200 saved and continue and then pay the rest of that back to her debt. Okay. Now, again, this is not to get out of the hole to buy more stuff. You know what I mean? I have people that do velocity banking. They followed the steps. They got rid of the debit card. They paid down their first rounds of debt, but then they went and bought a whole new living room set or bedroom set or something like that. And it's good. I mean, it's good. I mean, it's good if you want to pay down those. You can pay down those things because you know how to do the steps. But I would prefer you to increase your cash flow. The whole thing about velocity banking is know your cash flow to increase your cash flow. Okay. So now people say, well, where can I find a $50,000 property at? Tennessee, Georgia, South Carolina. Go ahead, Rosie.
That's me.
You never lie about that. Matter of fact, we got 2 for less than 50, right?
I know, right?
And then one of them is a quad. So it's like we got really like 5 apartments.
Actually, we got 5 then, because you think of it,
Yeah.
the part that has each unit can be rented out.
Exactly.
I told you already, I'm gonna have to take a trip by summertime, man. If it's like that.
So now you have the quad, okay? So now we have 4 units that we can rent out. Just say we rent them out for $400 each side. And then we have the single family resident and that we say we rent out for $1,000. So what they just did was they took their income and increased their income to buy properties. So now they increase their cash flow monthly, okay? So that's the goal. So again, there's a correlation. You start with velocity banking. Velocity banking automatically going to boost your credit score up. Anytime you go to the bank, I say you want to look financially sexy. You go to the banks, they'll never turn you down for
Say it again. Say it again.
financially sexy. So you want to look financially sexy. You want to be able to start buying performing assets. I know you have rentals, Brian. I don't do rentals. You know, a lot of people in here probably do rentals. Some people have probably a mixture of rentals and mortgage notes and seller finance properties, you know. So me, I'm a seller finance dude. I hold my notes. I can if they're not performing or we want an exit strategy, we get them to make the down payment, 3 months of payment, and then we sell that note off. Okay. So an example of that.
The board, can you hear me?
Yes.
Oh, okay. Because I talked a few times and
I'm sorry.
no problem. I own a business, so my cash flow isn't always positive. Like some months it might be upside down, more expenses than income. Other months it might be, more income than expenses. How do you manage that if you're not a W-2?
How long have you had your business?
I've had it for. I have a few businesses. So the one the foundational one, I've had it since 2004.
Okay, so wow. And you have corporate credit? You have business credit yet? I'm sorry.
You know what? I don't have any of that. You know what I realized? I never did stated income. I just, I put what I made. And so,
Oh, yeah, you don't do that. For a business side, we don't do with the personal. It's like the two, say you start with 200. So on the business side, you always start your business making $1 million. And then it'll ask for your personal. Then you put your personal as 265 or something like that. And then your rent is 3,000. You know, it's just, again, it's all stated income. So if most small businesses are averaging around $1 million. So you can start out with $1 million on the business when you apply for business credit. But places that give good business lines of credit is Bremer Bank. You have your EIN, right?
no.
Okay.
Oh, yeah, I do have my EIN. I
Okay.
thought you said some other letter. Yep, I do.
Okay, so you need your EIN. You need to set up a free Duns and Bradstreet account. I don't know why I would say Bradford. Bradstreet account. Those will be, the Duns and Bradstreet don't do anything for you on the business side. And this is for my business people. But again, it helps you to look official when they go to pull your business credit. So Bremer Bank, then it's going to be, what's the other bank, Brian? Shoot, Bremer.
NAV.
Oh yeah, NAV. You have to open up a NAV account. You have to open up a NAV account. NAV is not really a business extending credit, but what NAV does is for $50 a month, you make a payment to them and they'll report that to all 4 business bureaus for you. So that way you're establishing business credit on the NAV part.
Hey, Sabor.
Yeah.
For everybody that don't know about that, if you go check them out, I just found out because I did it this week finally. They run a little special now where they do 3 months for $90, where it would originally be like $119. NAV is, and yeah, they do the trade lines, like you said, and they report to all the 3 major business credit bureaus monthly as long as you keep making your payments.
Oh, there we go. I couldn't think of the banks that I have the cards that give the highest line. So Bremer's, then you want to do NAV, that's just an account to open up. So they'll report to your credit, open your trade lines. And then you have bank, what is it called? US Bank, US Bank. There you go, US Bank. I couldn't think of it. US Bank. And I have one more and I can't think of it. It's in my wallet somewhere around the house. And I'm not standing up because I got a dress shirt on and sweatpants. So, but those 3 right there is good to get started with Nanette, with establishing business credit. Again, you have to have your EIN and your DUNS number. So you're going to apply it with your EIN for your business. And then of course your DUNS number don't do anything for you, honestly, but if you have a DUNS account, it makes your business look more official.
So I just have a quick question. Support with the young man.
Right, stated income.
I heard 2 people.
It's stated income
For what?
for the business. When you do $1 million, they're not going to ask you to verify anything.
No, it's not. Only people that do that is Amex, and it's not normal. It's only like reviews. Like, so say if you stay at $1 million, again, we were talking about not updating your profiles. If your business stays at $1 million for 10 months, they're going to ask you for income verification or statements from your business. And that just comes from lack of people not following up on adding their profiles.
I just had one ask me today. So that's funny that you.
Was it Amex?
No, it was just another credit card, that Capital One that I have.
Okay.
And they asked me for my income verification.
So,
and I was the same until I spoke to you just now.
Okay, so Capital One and Discover do not apply. These business owners do not apply. Okay, don't. I'm going to put don't apply. Reason why, they report to your personal. So if you transfer a balance from your personal over to one of those cards, all you're doing is just transferring that debt to another card. It's still going to show up on your personal credit.
So when you say don't apply for Capital One and Discover, you mean for business credit?
For business credit. Personal credit is fine. I'm talking about for business credit. This is for the business owners on the call.
I'm talking about personal credit. They just asked me for my income verification. So I went back in there and just put in the 200,000.
Oh yeah, you just probably, you probably just haven't updated. So yeah, I'll get that sometime. Can you, like, it's basically like you haven't checked in for a while. And again, that's the 9-month thing that most people miss. They don't realize that the creditors are doing a random check or audit of people income So that's why they'll ask you to verify your address and income.
Okay.
Tabor, I just have one more question. So with the
That's
gentleman
great.
Brian just talked about with the nav.com, he said that they're running a special right now for like $90 for 3 months, and that will start with the trade lines for your business.
Yes, that's what NAV is a trade line reporting. It's sort of like self-lender on the personal side. With self-lender, you can open up account with them and they'll report to all 3 credit bureaus. NAV does that for business for all 4 credit bureaus for the business side.
So as long as you have your EIN and your DUNS number, you can go through and apply for the nav.com. Okay.
Mhm.
And you pay them whatever it is a month for them to just keep reporting.
Mhm.
Yeah, it's usually $50 a month, but right now they run a special and it's actually $95 for every 3 months. And that's a savings because, you know, $50 times 3, that's 150.
Right.
So right now they're doing a special
Yes,
95.
do you know how long the special is gonna run for, Brian?
It's still running now. It don't say when it ends.
Okay,
So I guess just try to jump on it as soon as you can. Cause
So-
I just
ask you this,
Thank-
Brian, since you're doing that too, are you able to put that on your credit card to use in the Velocity banking, or is that something that they don't accept?
Huh? I'm sorry, one more time.
Okay, so for the nav.com, right?
Yes, they take credit cards. I apologize.
Yeah.
Yes, yes.
Okay,
I thought you were talking about something. Yeah, so the $50 a month will go on the card. Again, you just pay that off whenever you pay your card statement. At this point, when you're a business owner and you're doing $50 or joining programs for $500 for like intellectual properties and stuff like that, that stuff is minute to us right now. You know, so I'll pay $5,000, $6,000 for an educational lesson because I already know my Velocity banking is going to be paid off, pay that debt off. You know, that's how you have to think as using Velocity banking. You're thinking,
and that's a write-off.
yeah, and it's a write-off too. Yeah, so you're thinking as a business now. You're thinking not more along on a personal level. You're not thinking on a consumer level. And again, Velocity banking again is about bossing up your financing. You know, your finances, paying off debt at accelerated rate. But the thing is, the beauty of it is, I'm using the bank's money. And the banks, because they're called for a person like me that use Velocity banking that a bank don't get credit off of or interest off of. I'm a deadbeat, like a deadbeat dad. I'm a deadbeat borrower because they're not able to get money off of me, you know? So say we open up a card on a personal level. We're going back to the personal real fast, Brian. So we open up the card on a personal level, okay? And it's a promotional 12 months, okay? So at the end of that 12 months, I have a balance of $6,000. I don't have the cash flow to pay off the $6,000 or to make my minimum payment, blah, 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 whatever situation. And it's now you're going to start kicking in interest to pay the interest. And this is where we don't worry about interest in Velocity banking. Because again, you're paying down that debt at accelerated rate. Even if they make $2 off of you, they make nothing off you really with Velocity banking and with as far as interest. But say the bank, your card is 24% and you're at the end where it's now about to start charging you interest monthly, and you have a balance of $6,000. So that means off $6,000 and you're 24, then you're going to be paying $1.25 a day for whatever balance you have on you. Okay. Which is really not nothing at the end of the 30 days. You still $200-300 added to your bill, but we want to avoid that. So the game is to apply for another card. Again, is going to be a balance transfer card. So all you're going to do is transfer that balance. And you want to get a balance transfer card. And again, you're using your stated income. Now you're probably like 240, 250 when you do your profiles. You put that 3,000 as your monthly rent or mortgage. Okay. So now you get a high limit card and you're doing a balance transfer off that remaining balance. And a lot of balance transfer cards come with a promotional rate. Again, 12 to 18 months. So now you're paying that $6,000 back at 0 interest. So that means all you're doing is using your Velocity banking cash flow to pay back that card.
So, Sabar, I got another question, right?
Mhm.
Okay, so we all have credit cards, right? And we didn't know to do the stated income for the 200,000 or whatever. So you just put your regular income in. Now we're going back into our profile and we're gonna go back and go increase our stated income from whatever it was to this amount. So are you saying that they're not gonna want to know why there's a jump?
No, if we hold on. So if you stagnant in life, right? That's what the bank's gonna look at. If you just stay at 50,000 for the rest of that card, the banks are gonna look at you as being stagnant in life. You haven't had no promotions, you haven't had no kind of job changes, you have no kind of career. Why would I extend you credit? But if you jump up to that amount, that means, oh, she got a new job. Oh, she made a new source of income. Oh, she got married or so whatever. You know what I mean? Something increased in your life that the banks are willing to extend you that money.
And they just don't check.
No, they don't check.
Okay, I just wanted
It's
to
all
make
stated,
that.
yes, ma'am. It's all stated. I just want to stress that to people because I've got that before where people say, man, you want me to put 265, you know, so, so yeah.
I just wanted to make sure that's not gonna raise any red flags.
No, there's no red flags on there. There's no red flags as far as credit. On the business side, there are a couple of red flags. And that's going to be where people putting in, you know, you're making $1 million, but you're only taking out 50K for as your income. You know, you want to make sure so you always want to be under, if you're making $1 million, then your take home is going to be probably 200K out of your business. That's all. So you don't want to do no crazy stuff like I make $30,000 out of my a year, but your business is making $1 million. It doesn't match up.
Okay, so, okay, that's great. So you'll definitely be around for questions. So
Yeah.
I'll be set.
All right. So my goal, I want to know what's the highest available credit that you have.
Who, for me?
Yes, all together, all your total, you know?
Oh, of all my credit cards?
Mhm.
Oh, gosh.
Not the
So-
balances, how much available credit.
No,
Don't tell everybody your balances.
no. So I have a ton of credit cards. So all my available credit right now, I would probably say, let's see, 3,000, 1,500, another 1,000, another 900. And then I got like little store credit cards, but I'm talking about cards that I can use to pay bills, right? That's what we're talking about.
Mhm.
So I would say 3,000, 1,500, 1,900. That's it.
Okay. So yeah, so you're still at the lower cards ends. Go ahead, Rosie. How much?
So you're saying about $6,000?
Yeah, about that.
So at your stage in life, you should be around 120K. Everybody on this call right now, I'm not sure what their credit situation is, but needs to be aiming at 120K or higher. Okay, that gives you, when you do 120K or higher, that gives you, remember, you can't go over 30%. Okay, that means that gives you annually, that's most people don't make 36K to use. With that 36K, my goal is to teach you how to liquidate your credit card, pull that 36K off, and buy a performing asset that would increase your income. Okay, so remember, in the situation where we had a $5,000 income coming in out of paying all of our debts off, and we bought some performing assets, how many months does it take me to pay down 36K? Or 5,000. And again, 5,000 is easily doable these days.
Less than 8 months.
That's going to Chanel. She's been quiet the whole time.
Yes, I'm here.
That's it. That's questions for you.
What was the question? I'm sorry.
So you're making 36K. You took 36K off of your card because you had 100. You have 120 available credit. You're allowed to use 30%, right? So that means you have 36 that whole year to use, right? How many months with 5,000 does it take you to pay back that 36K?
About 6, 7 months.
7 months. Most people don't make that in their own job.
Right.
No.
So now that bought you one asset. Say you just use the whole 36 to buy just one asset. So now you boss up and do it again. And now you take buy another property for 36, Rosie. You buy another property, right? Another 7 months, right? Another 7 months, not 10 years, not 20 years, not whatever it's going to take you to buy. Think about it. If I buy an asset every 7 months, right? And I buy, say 12 of them, in 84 months, I'm going to have 12 asset perform. How many years is that? You know what I'm saying? So I'll have 12 performing assets that's bringing me an income in. 12 performing assets that's going to actually sit there and generate wealth. Generate generational wealth. I can leave it to my kids. I can leave it to my whatever. My kids can, do what they need to do with that income, their properties, whatever. That's the goal. Rosie,
Sabor, that's less than 7 years, right?
it's less than 7 years. You have 12 performing assets that's bringing you income. And say those assets, again, those 12, and you say we bring $1,000 in, that's $12,000 a month. Some of my, oh shoot, I put too many. That's $12,000 a month.
No, that's good. That was good. That was good. Those numbers are good.
So some of my business partners, what we do and what we're going to do for this whole year, okay? And this is an example of the power in Velocity Banking, okay? So we bought a property, two properties for $40K, okay? We fix them up, put $20,000, $30,000 in a rehab. We put a homeowner in there. So the property appraises for 180. And let me go back over the numbers so everybody can see. We bought two properties. So I'm just saying 20 a piece. How about that? So we bought one property for 20, okay? We put 20 in, okay? On the full rehab. So that's 40K in. The property now appraises for 180, okay? So we just cash flow 140 off 40K. Make sense? Instead of using that money and splitting it out to the partners, you take that same 140 now, and now you boss up and you buy more properties with that 140. So say we end up getting 140. How many properties, Rose, you want to go with? 4? Say we bought 4 properties, right? Divided by 140. That's going to be 35K a piece in 1 year. And all 5 of those properties, not including the first one, but you bought 4 more. So 5 more properties, okay? You have income, generating income. Just 5 properties paying you $5,000, $1,000 a piece, bringing $5,000. What though I don't have to do no more? Got $5,000. I don't have to use my personal income anymore. I use the $5,000 that's coming in to pay back the loan. So one property, I've used it to pay back the first property, okay? So again, we already know, we're gonna just go ahead and do this. So 35, and we have 5,000 paying off one of those properties, 7 months. Pay off the next one, 7 months. Pay off the next one, 7 months. Pay off the next one, 7 months. All that's income for the rest of your life. You just boss up your finances, just starting with Velocity Banking.
Yeah, this is eye-opening. It's like I had an epiphany today. I want to make sure I get a good understanding to make sure it's going to work for me. But this is that's definitely something I never even heard of nothing like this before.
I've been doing it 12 years now.
I would have met you 12 years ago when I got that back settled
right.
$15,000.
Brandon there, Rodney there, they watched my journey and they were like, man, what are you doing now? So I'm like, okay, let me show you. And, they took the steps and started doing it and implementing their own lives and shit, hush. My brother, he was skeptical. He's always been there, buying the rental type stuff. And he makes good money. He's a registered nurse. His wife is a registered nurse, but they had debt because they lived above their means. But he paid off 3 properties now and got I think he's up to 12 doors now.
And so with this situation, was his credit strong when he started out?
Yeah, yeah, but I mean, it doesn't matter where you start out in credit, honestly, because soon as you make that first step and pay down your first round, your personal debt, your score is going to shoot all the way up anyways. You know, a 740 is no different from an 850. You know, the banks are still going to look at you as being credit worthy because you're going to, so it doesn't really matter. Because if you pay down, say you have $6,000, you say you have $6,000 available credit, and right now you're probably at, say you were at 75% of your available credit. Soon as you take that first step, you wipe away your savings, and you say you start cash velocity banking. Say you put down 6,000. So say you put down 2,400 on your first round of your card. Your score is automatically going to shoot up 100 more points. And again, the next month, you're going to pay down the next one. So your utilization went from 75 to like 45, then 45 to like 35, and on and on and on until actually all your debt is wiped out in 4 or 5 months. Now, I have people on here that tell you they started in January, they'll be done with their bills next month. And they had $7,000, $9,000 in debt.
So when you give the example of 75% utilization, when do people start applying for more credit?
Every 3 months, you want to ask for a credit line increase. There's some months they're going to tell you no, but every 3 you still stick to your guns, you know. So basically, after your third round of applying for credit line increases, that's when you should be updating your credit profiles on each credit card or each credit, whatever. Again, the goal is to increase your lines of credit. Do not get loans. Banks, you go to a bank, and especially for a business, they're going to try to give you a business loan or a personal loan. We do not do loans. If they try to stick you with the loan, you just walk out. You said, that's not what I want. Because again, millionaires is not known as for their net worth. It's not the stuff or the asset they have available. It's how much credit they have given to them.
So my question was adding credit cards. When should you start adding credit cards? Not just increasing.
Oh, so credit card companies look at inquiries every 2 years. So you're allowed to apply for credit cards every 12 months.
Okay.
Okay. So if you recently applied for credit cards, anybody on the calls, you know, you might want to wait until, you know, the 12-month period. But when you do apply for the 4 main cards, again, do not apply 1 day here, 2 days later, a week later. You have all 4 of the cards. You already know which cards you want. You have the tabs open and you hit submit on each one at one time. I like to do it at 2 a.m. in the morning because when you get higher cards, but then I'm going after business credit.
So what 4 cards are you referring to?
It depends on what cards you like. You know, for me, I'm going after business credit. So I'm always looking for higher lines of business credit or new business lines of credit that came out. I'm looking for those type of things. But I mean, on a personal level, you know, they're all going to report to your personal card, so it doesn't really matter what card. But the things you want to look for is balance transfers to your account, to your checking account, because I'd rather do a balance transfer than ask for a cash advance, so they'll kill you in fees. So you look for a balance transfer to checking account. You want to look for promotions like a 0 interest rate for 12 to 18 months. You know, those type of cards. Those are only 2 things I look for. And of course, cash back or points, whichever one you want to use. I didn't even talk about that as far as credit cards, but just think about now you're using a credit card, you pay it down, blah, blah, blah. And every month your expenses are coming out. Your monthly expenses on that one card is coming out. Those monthly expenses actually accumulate cash or points for you because it's spending. So you're getting free points and free cash from the banks from utilizing their money.
So what if you apply to those 4 and you don't get, is there a chance that you won't get accepted by them? Or how does that work? When you submit to all 4 and let's say you don't get them all, or let's say all 4 of them say no, are you just waiting another 12 months? I don't apply a lot. That's why I'm asking.
Oh, no. So yeah, so if you already have say you have a inquiries on your internet, right? So you apply, and remember the inquiries stay on 2 years. So you have an inquiry, you give 12 months on one, and then you do another 12 later, and then you do another 12. The first round that you did, the first 4 is going to fall off by the time you apply for your next rounds anyway. But if you do not get credit, all you have to do is send a credit inquiry letter to both the creditor and the credit bureaus and get those inquiries removed because you wasn't awarded credit. There's different letters that you can send out that you can just Google, and it's just basically credit inquiry letters. One goes to the creditor, one goes to the credit bureau, whoever pulled it, because not all lenders pull from one, all 3. So you may have a Discover that pulls from TransUnion. There's a list out there that tells you which credit card or which banks pull which credit bureau. So Capital One, they're gonna pull from Experian, those types of things. And so you just send one to the creditor, one to the credit bureau, and say, hey, somebody pulled my credit. I didn't authorize this, blah, blah, blah. Take it off out of my name.
Can I say
Again,
something?
Yes, sir.
I was talking about
Yes, please.
I just wanted to say, so what I usually do sometimes when I want to liquidate my credit, I have eBay and I have PayPal, and what I do is I would transfer the funds from my credit card and I would send the money to my wife and as a gift or a friend, and then you could use that from the credit and turn it to cash.
Yes.
So that's all. I just wanted to share that with you guys.
You can do Cash App. You can Cash App a family member. The Cash App allows you to do $7,500 a day. I don't never do over 7,500. I just always do like 7,000 just to put it on. A week. So you can Cash App. You can do Cash App. You can do. There's so many different ways to liquidate a car. You can do I have PayPal Business. I can write an invoice to somebody myself, and then I can use my credit card to pay myself, and then they'll take. Of course, they're going to take the commission or the merchant fee, but the rest of it can transfer to your account simultaneously, or you can do the free one and wait 24 hours and have the funds in your account. So if you get ready to close on a real estate deal or whatever, just go ahead and liquidate the card, whatever method that you like the best. There's so many different methods. You can just Google that. There's different people telling you. You can watch YouTube, just liquidate the card and have your cash ready. So when you go to closing, again, you're not using none of your funds sitting in your account. I'm using the bank's funds. That's my whole goal, is to use somebody else's fund in order for me to build my business or to build my real estate portfolio or whatever. Yes, Asha.
Sabur, I have a quick question, getting back to the business accounts. Let's say you open another business, right? So it's fairly new business, maybe less than 6 months, and you are building the corporate business credit. On it, you have already, the IN number and dance number and whatnot. Now is the time, you're saying, to open the nav.com account, Brenner and US Bank. That's the time.
So in that situation, I would probably only apply for one card if it's less than 6 months. Now, if it's less than 6 months and you're making $2 million, by far, go ahead and apply, because they're going to give you anything you want.
That's not going to happen, right? So it's a new one. So obviously, it's just start making money, right? Like all the businesses. Mm-hmm. And how do I approach that now for this particular bank? For this particular business credit and corporate credit, because I want to build that, and I want this to be completely separate, obviously, for personal.
Yeah, anybody that's going into business, you want all your expenses not to show. So
exactly.
You're always, anybody that's in business should be aiming at that. If somebody has a hand up, so please ask your question. But Asha, there's going to be Bremer Bank and then NAV. So Bremer Bank over here that I have in the notes, Bremer Bank, they work with new businesses, companies, small companies.
Okay. So Bremer and NAV, those two, open both of them right now, right?
Yep.
And for new business, what would you advise to put as the business income?
Million.
For 1 million.
1 million.
For new business as well.
And then for your personal, you're going to put like 240, 250, because you're paying yourself out of the business.
250.
Mm-hmm.
Okay.
And your rent or mortgage is going to be 3,000.
And the Brenner you said and the NAV account are working with businesses, and what they do is they basically report to all the business bureaus under that business and that, correct?
Yes.
And let's say after I do that, is it safe to say 6 months keep that way, or do I keep opening other cards as well under or business lines under
So-
that business?
So again, if you're opening up a business and lines of credit and you having personal loan, so they're going to pull those cards right there are no PG, meaning they don't report to your personal. Okay, you're not responsible, your business responsible. However, they will pull your personal to see where your personal credit is at when you apply for those cards. Okay,
So they still do the Brenner and the NAV?
Not NAV. NAV just does a free. It's like Credit Karma for business.
Oh, okay.
Yeah, it's like Credit Karma for business, and they also let you see your personal side on it too.
Okay.
So yes, so you'll see both your personal and your business. So again, if you have recent inquiries, but it's only one, it's fine. If you applying for a whole bunch of loan business lines of credit at once, it just sends off a red flag. You know, and again, they're using that off of your personal, not your business inquiries, your personal inquiries. So if you're going to apply for the because NAV is not credit pooling, so really you're going to have one inquiry, and that's going from Bremer Bank. Okay, so that Bremer Bank is just one inquiry if you don't have any more that's currently on there. So
okay.
So then 6 months from now, applying for another loan, another line of credit is not going to hurt you at all.
Okay.
But you
So
out just
at first, just every 6 months, correct? The
Yes.
Brenner Bank, NAV, and then every 6 months will be additional line of credit.
So your
and
next,
that,
so once you start building that business credit for that first 6 months, do not apply for one card. Apply for 4 business cards. You know,
Okay.
pick the business cards you like. And I always say, look for business cards that's often a balance transfer,
Yep.
cash rewards, or a points. And then, you know, again, have all your tabs open like I have up here now and hit submit at one time.
Okay. So after I already have the seasoning, so to speak, after 6 months and it's all reported, then after that, 4 of them at the same time after whatever, right? And now I have 5. Okay, thank you so much. That's perfect.
Okay.
You do the same thing with personal? Do you do the same thing with the personal?
Yes.
Okay.
So I have a quick question. I'm in New York. Does all this work in New York?
Yeah, it works anywhere you work. Yeah, it works when you work it. So, but yes, it works anywhere. So you're not looking at the place you live at. It's not any of that. It's looking, again, it's going to your income, your expenses, and your cash flow. That's what we want, cash flow. We want to increase our cash flow. The higher we increase our cash flow, the higher we can pay down debt at a faster, accelerated rate.
And then I have a question regarding a corporation. So I already have an S Corp. That's a real estate corporation, right?
Yes, ma'am.
Has real estate name, but I've been told that I should have a corporation that doesn't show up as real estate because the lines of credit will be affected. So what's your take on that?
So you can do real estate, but you don't want to do leasing or something like that. You want to do other. So when they ask you if you're doing real estate, anybody that's on this call, when you apply for business lines of credit, when it asks you what your business is, you can do real estate, but you want to do other real estate activities. And then it's going to give you a subcategory. Again, other real estate activities. Okay. Because what happens is you're competing against the banks. Banks give mortgages, banks give loan. So what they're looking at is you as a competitor. If you say you are a leasee or you know what I mean? So, or something like that. So they're looking at you. And even though they'll give you a business mortgage, they don't want you to be their competitor, because with a business mortgage, you're owing them money instead of then taking away from them money.
Okay, so my company name is Solar Realty Enterprises. Like that won't be like a red flag?
No, just make sure when they ask you, just make sure you put down business, real estate, other. That can be property management, that can be whatever, you know.
Okay. And then my next question is, I applied for American Express because I didn't know what I know now.
No.
And they actually sent me a letter asking me to fill out a 4506 to confirm and verify my income.
Really?
Yes, they did.
I never heard that from American Express. The American Express are, that's why I told you, they do audits on people sometimes. They're really strange. Sometimes American Express is not a good card to apply for business credit anyway.
When we talked about this,
Huh? Don't talk
What?
about
we talked about American Express. We talked the other day because you were saying, yeah, that'd probably be the last business card you want to go.
Yeah, that's the last business card you want to go for, because American Express do not, they're like Capital One so Capital One on a personal level are basically for subprime borrowers, okay? Meaning Capital One is going to give you credit, but they won't extend you high lines of credit, okay? Most Capital One personal cards are going to max out around 15K if they let you get that high.
Okay.
So, and that's same thing on the business level with American Express. So American Express probably only started you out with $1,000, even if you're making $3 million with proven income. I mean, $3 million with proven income. They're only going to give you like $1,000. So they're looking at businesses as subprime. So you
American Express wants you to like really prove yourself to them. Cause like I was telling before, I put initially that I made 130,000, and they just gave me like a 5K credit card limit. With me having, decent credit and like, yeah, I put 130K is my salary or whatever, or revenue. And, I got like a 7, my credit score like low 720, made me like a $5,000 credit limit. I'm like, what am I gonna do with this?
I have one more question. When you say to apply for credit every 9 months, or rather they're looking at you every 9 months and call them up and ask for credit increase every 3 months, are they doing a hard pull or are they going based on your activity?
For business, or you saying personal?
Both, for both.
So personal, they do not do another credit pull. They do a soft pull, but they do a soft pull, but they don't, that's just to see how many inquiries you have and stuff like that, how much utilization that you're using. So if you ask for a credit line increase, make sure your utilization is under 30% before you ask. I would say a good number is around 20 or less before you ask for your credit line increases. Now, on the business side, Eline, Financial Services, they will pull another, it's Eline Financial Services, I apologize, I just seen it somewhere, there you go. They will pull a second hard inquiry, but I have accounts with them. They give high lines of cards. So, so I don't even ask them. I think their card started out with me was like 65K. I don't even ask for a credit line increase on that card.
Okay, and last question. So what about applying for a Home Depot, a Lowe's, those kind of credit cards? What's your...
Brian, like, so I do not like people to apply for store cards. However, if you're doing a rehab, I have a Lowe's card that I just did we were doing a whole rehab on, and then I think my credit limit on it is like 35K. So it's a personal card. Again, I asked for a credit line increases because they'll give you that. Now, Lowe's also has a business card that gives you high lines of credit. So.
Thank you so much for everything.
Yes, ma'am. Yes, ma'am.
Thank you.
So who's ready to level up? I want to see everybody say they ready to boss up. I need for y'all to boss up. So
I'm ready to say, bro.
I need more real estate investors with me to take down this, to change this thing right here. So are you, so I'm sorry, your name was?
Antoinette. I'm ready.
Not you, Antoinette.
Sandy Solar. I'm in Des.
Okay.
And I'm joking.
Oh, yeah. We spoke before. So Sandy, is your goal is to buy real estate? Yeah, I know you say you have a realty company. So are you buying real estate or brokering real estate or
anything with the company at the moment for the last, I'm going to say 5 to 7 years, because I went into a depression, but I never closed it out because I knew I would come back. So my goal is to, open that back up, and I would love to buy notes. And I do want to hold some properties for rental income. I do.
Okay. So
I do at least, have at least, I'm going to say 5 notes within the next 2 years minimum.
Okay. So my thing is with that, I know in that group with Desi and, Jonah, I don't want to speak bad upon nobody in here. So I want to say this. I do not buy notes. I buy properties and create notes. You're going to have a bigger spread. Okay. I know a lot of people will a lot of people want to give you the fish. I'm trying to teach people how to fish and be self-sufficient. And again, I have people here that will tell you they have actually been self-sufficient in doing the things that they do.
Okay,
Hold
so
on.
I'm,
What's going on, bro? I didn't even see you on there.
What's up, man? How you doing?
Good, bro. But go ahead. I'm sorry.
thank you. Yeah, that's really my interest right there, what you said. You know, I want to be able to, you know, capitalize on many fishes.
Yes. So Rosie, you had a question, bro? Hola.
Oh, yes. You said get rid of your debit card.
Yes.
How would I? I got one right now. What would be my first business of order of business?
So do you have a credit card too?
No, I don't.
You don't have no credit card?
I just actually established my LLC. Actually, just
No, I mean personal credit cards.
No, I don't. No.
Okay, so your personal credit card, whoever you're banking with, I would go to that bank and ask for a bank card. Again, it's stated income. You can do it online or you can go in the bank and apply for the card. But do not say you make whatever your income is. Always start with 200K and your rent is 3,000. You want a high limit cards. And then you just want to take this little shredder right here that takes cards and put it in there. But no, you can keep it. You can keep it somewhere where you need to take cash out instead of having to walk into the bank. I'm just saying, don't have it. Don't be your go-to card. I always make people get rid of that card. You know, that's the first card you have to get rid of because unfortunately, and it comes with generational ignorance, we were taught that cash is king. But in the real estate world, everybody knows credit is king. If you do not have credit, or if you have bad credit, or you have poor credit, it requires that you build that credit in order for you to be successful as a real estate investor or as a business.
Okay. All right. Appreciate it.
Yes, sir.
All right.
So if your cards are maxed out, Sabor, you just recommend doing the 30, putting them down to 30% before you apply to the other cards?
Yes, they're not going to extend you credit if you're maxed out. They're just showing that you're basically a consumer. And again, you want them to look at you as being an investor or somebody that's financially stable.
Okay, so just get that money to pay that down and then apply.
Yeah, and if you have a savings, stuff like that. One thing that a lot of people don't know is the CARES Act still going on. I heard somebody say earlier about 401k. You can actually take money off your 401k. Make sure you pay the 20 to 30% before on the withdrawal. You can actually withdraw money without the penalty now, and use that money to pay down your cars or your debt if you don't have that business coming in, that business revenue coming in.
Okay.
Hey, Sabor.
Yes, sir.
Got a new nugget for the group too.
Okay. Your
I don't
audio
know.
is kind of off too, Brian. Just FYI.
All right, yeah. Kids are messing with my computer. But anyway, man, for everybody, I don't know if this is the case for 401k, but I learned actually this Wednesday with IRAs, if you got any money on in an IRA, and like say you wanted to pull it out, you need to use it for, you wanted to use it for a quick investment or anything, you can pull money out your IRA and have it out for 60 days. That's 2 months. If you didn't do,
You keep going in and you keep
Your
going in.
audio is off. You keep going in and out.
Yes,
Going in
Sabor,
and
can you
out.
repeat that, please?
Yes, Brian.
Because he was in and out.
He's saying that with the IRA, you can withdraw money for 60 days without having to pay a penalty on this IRA. Yeah. So say you had a closing or something like that, you can actually withdraw money. But again, right now with the CARES Act, you can just withdraw the money and not pay a penalty. Just want to pay your taxes off the top. Don't get stuck like a lot of people. They withdraw the whole amount, and then when they go file their taxes, they actually owe the IRS money for capital gains.
Say that one. I missed that last part. What you said about.
So if I take money off of my 401k, right now you can do a withdrawal under the CARES Act, right? It's going to give you the option when you withdraw the money. Do you want to pay taxes now? How much? You want to go ahead and pay the 20 to 30%, whatever bracket that you're in. Most people are in the 30% bracket. Pay that money on the withdrawal at that time of withdrawal. And then, of course, you can include it on how much you withdraw. You pay the 30% on your withdrawal. And that way, when you file taxes, you break even whatever your income is for that year.
Got it.
Yeah. Some people just do 10 or whatever. Yes, sir.
I did that last year in December, before that time period expired. If they opened it up again and the terms change, you have 3 years before you have to pay the taxes back.
Yeah, if you don't do the 30%, you have 3 years. If you say you do 0, you do have 3 years to pay that back. I apologize. I should have said that. I just don't want nobody to see, dang, I got a tax bill for 6,000. They'll pull out 30, 40,000. They got a tax bill for 6,000, but you do have 3 years to pay it back. I just tell people always just pay it off the top if you're going to do that way. But thank you, Rodney.
Right.
So Rodney, are you Velocity Banking or are you just using your business right now? I know you have corporate credit.
You blew my mind tonight. So I've never heard of Velocity Banking until tonight.
Okay. Anybody?
So we will be talking.
Oh, yes, sir. Yes, sir. I appreciate that. Anybody on the phone that's been doing Velocity Banking that has any notes or anything they want to share with the people before we go? Because I don't want to hold everybody up. I just wanted to share this information. If somebody has a case study, you can send it to me if you want anonymously. Of course, I'll put it up there so we can all learn from each other, each one teach one. But anybody that's doing Velocity Banking, have any notes for anybody? No? Rodney, he's gone. Brandon?
No, I'm not.
Oh, okay. Brandon's gone? Okay.
No, I don't have anything.
Okay. Now you bossing up this year, Brandon. Hold on. Brandon bossing up this year too, y'all. He's getting ready to take down some investment property. He was being shy about it over there.
I'm trying to get there. Yeah.
Right. Right. Hey, Al, we just wanted to appreciate you, brother, for paying it forward for what you've been doing, you know?
Oh, absolutely.
I appreciate that.
Definitely, bro.
Well, wait till after this rehab, see what Rosie and them say about me.
Question, Sabor.
Yes, ma'am.
We had that workshop with Dusty with I don't know if it was last week or the week before with the life insurance policy.
You didn't get any
on that one?
Yeah, the infinite life banking system.
Yes. Can these two, Velocity and Infinite Banking, be put together to create a vehicle where we can maximize, our goals with the profits and all that stuff?
Yes, but
let me show you.
Okay, there's a big but in there. A lot of people, even if you look on YouTube and start studying about Velocity Banking on your own, a lot of people try to sell the infinite life banking system along with Velocity Banking. However, just imagine you go get $1 million policy to do the infinite banking, okay? You have to pay down the premium before you can borrow off of it. So you have whatever you put into this, only what you can borrow off of. So say you put 40,000 in there and you need to borrow 40,000 off of your life insurance policy. You have to make sure you pay down that 40,000. Whatever you have in there is what you're borrowing off of. On the banking side of Velocity Banking part of it, I don't have to, I can take the money off my credit card and put it on a life insurance policy, sure.
Yes.
That makes it work.
Right.
I just pay Velocity Bank back my income back to, now I have a life insurance policy worth $1 million and blah, blah, blah. To me, it's easier to use the bank's money and let them continuously give me credit line increases that every time I say, like, right, I have, that's my thought. I don't know. Anybody that's think about it like that, that's the only reason I thought about it. And plus the guys was kind of skittish and off and wasn't really, their presentation was really that good to me. You know what I mean? So anybody had thoughts on that, but.
Yeah. Hey, Sabor, this is Brian here. We talking about that last week too. I see what you're saying now, because it seemed like with the infinite banking, you kind of tapping into your savings money to pay for the infinite banking, whereas with the Velocity Banking, you mostly using the bank money more than your money, right?
Right. I mean, right now I'm saying I have $240K available. and personal, that I can use 72K of it and to do what I need to do as far as real estate deals. I think that's a better situation for anybody that's using Velocity Banking. And again, that's just my thought because I've been doing it so long. You know, I hear a lot of people try to, you know, talk bad about Velocity Banking. It changed my life. I ain't gonna lie to you. I'm pretty sure there's people on here that can testify. It changed their life. It changes your financial situation. It makes you boss up. You know what I mean? I don't know if the infinite banking system can make you boss up like that because I haven't used it, honestly. But I do, the way they were talking about it and having to pay down a premium first before you can actually borrow off your life insurance policy, it makes no sense to me when I can go ahead and take the money that's available to me, boss up by buying 3-4 properties, and then Velocity Bank back that 72K. Because again, the goal of Velocity Banking is paying back yourself back to zero, your cars back to zero, because that's your available money. You know what I mean? So that's just my thought, honestly. I never.
It's the boy.
Yes, sir.
Are you available to speak tomorrow? I want to talk more about the Velocity. Velocity.
Yeah,
Bank.
yeah, sure. Yeah, I can do private consultations for you.
Okay, yes, all right.
You call me all the time anyway. Why you even ask me that?
You're right.
By the way, Sabur, I love the boss app.
Yeah.
This is gonna be my mantra from today.
Actually, mine is movement is a movement. You know what I mean?
Oh, I love
it. Movement. You have to move in order to get somewhere.
Yes.
Like if you don't move, then you're gonna be stagnant. So movement is a movement to is mine.
Awesome. But now I fall in love with the boss apps, but I'm stuck with that.
All right.
I have to apologize to everyone because Sabor will not be available for the next month.
Oh yeah, that is.
His time frame is
come on.
Only on Mondays at 10 p.m.
Yeah. And Sean and Will are not even on the phone. Sean and Will had me while I'm raking, scraping floors. They had me on conference calls today. I'm like, dude, I'm sweaty right now. You really about to have me on a conference call on Zoom all day? We had like 4 or 5 conference calls while I'm out doing a rehab. I'm like, are you serious right now? Mm-hmm.
All right.
But yeah.
Hey, man, that's
Anybody
what
else?
happened with the plan.
Sabur,
That's what happened when you began with the plan, man.
Oh yeah, it was good. It was good though. It's always good though. Yes, ma'am.
I wanted to because I missed the beginning because I was having trouble getting in to the call.
Yes,
I wanted to wait till everybody leaves and just go over that real quick if they didn't want to go over that again.
Sure, you can call me personally. I can go over it again.
Okay.
Oh, you want to see this? You want me to show it?
Yeah.
Okay, that's fine.
This is already recorded, right?
Yes, it's going to be recorded. I think I'm going to put it on my YouTube channel and I'll share it with the group too.
Okay. All right.
Because I want to do more of these and I want to use different people's case studies. So, you know, people that's willing to anonymously send me their info. I will not share your name, whose it is, and all that stuff like that. Same as happened today. I just want people to each one teach one. Everybody see everybody's different financial, situation. Because some people finances is better. Some people are trying to grow. But again, this is going to change all that for you. I promise you.
Thank you so much for sharing your knowledge, Sabor.
Yes, ma'am. Yes, ma'am. That's what we're supposed to do.
Thanks, Sabor. This is Rosie. I really appreciate it. But everyone, I'm so sorry. Sabor has to go to bed. He has to get up really early.
Amen. Amen.
He had me up at 3:30 this morning. I swear I haven't been back to sleep. So just in case y'all don't know, Sabor is having a baby. No, not a real baby. Not a real baby. I'm building an e-commerce business, and so the people that's building my e-commerce business, doing my website and all my development and AIPs and all that stuff like that, they're actually overseas. So they work at night. They're working at night. So my midnight is their noon. So I'm conversing with them till like 3 a.m. So I literally got like almost 2 hours. So I would say about 2 hours of sleep last night because she logged off early. Then Rosie had me back up at 3:30 to go do her work. So I'm on fumes. I'm on fumes.
It's our work, Sabor.
Yeah,
It's
our
our
work,
Work,
our
yeah,
work,
yeah.
our work. There we go. There we
Make
go.
sure
But I
make sure
appreciate
taking
you
some
all.
vitamins and
I
stuff.
appreciate you
Sabor.
all for listening in, and I hope that I pass something along that helps somebody boss up. I would love to hear your stories. You know, I have several people in the calls that have been in the velocity banking classes, and they've been doing wonderful. I have nothing but good things to say about them and their profiles that I've seen. You know, if you go to my IG page, which is Demary, DEMARY, funding, FUNDING, CO on IG. You can see a lot of the people profile. They send me monthly credit updates to show me where they at and where they've come from. You know, somebody gave me a call the other day. Oh, it was Rodney Thompson. Rodney, you there? Rodney Thompson. Rodney Thompson. Rodney Thompson. Rodney Thompson. He can't hear you. Brandon.
Sorry.
Get your husband.
Hey.
Get your husband.
Hold on. Hold on.
So how do we pass velocity banking down to our children? How do we pass credit building down to our children? Because again, it's not as just stops with us. I don't hustle for my first name. I hustle for my last name. You know, and I want everybody to think like that. You hustling for your first name. I mean, you don't hustle for your first name, hustle for your last name. So he had asked me, hey, I was wanted you to just 1 second though, because I was telling him how we hustle for our last name. So he asked me, how did he build his kids' credit? When your kids turn 16 years old and you have been velocity banking, your credit is good. And your credit payment history on one card is good or all your cards is good. You add your kids as an authorized user on your card. They do not get a credit card, but they download your payment history. What that does is that boosts their score when they turn 18, when the credit bureau start reporting at 18, they'll walk away, not in debt, they'll walk away with an 800, 850 credit score. So again, Brandon's on the phone. He's been to
my son, Sabor.
Yes.
This is Audrey. My son, he's 6 years old, and I already have him on my credit card as an authorized user.
Nice.
Same here.
He's 6, and I'm already building his credit.
Nice.
Wow.
Hey, support same here because an investor friend told me that too. You can put them on like the day they born, like literally. The day after they're born.
Yeah. So
They gotta
I
load
think people wait till they're 16 just because at 18 they'll start reporting and they're going to get their credit card. But Ronnie did it. So he called me the other day. Excited. So can you share what your son scores, or you don't want to share?
Hello?
Yeah.
Yeah. Can you hear me?
Yeah.
Okay. So I have been stalling, busy, whatever. And about 35 days ago, I put my second, third oldest on the credit card, and I'm talking 30 days. He went from no score to like a 756.
Wow.
So that's just amazing. He don't get a credit card because, you know, we got to teach the kids money management.
Right.
But I explained to him, do you know what just happened?
Yeah, but
like, you know,
the same thing I was telling you before, and this goes to everybody that has children. You have to teach your children velocity banking because it would change it. My son works, his son works. So, you know, my son, his first car was like 10K. He blew that mug up. He bought video games and BS. But I had a crazy fit in here, but I showed him how to velocity bank and pay that mug back down. You know, and that's what we have to teach our kids. You know, even if they have a $1,000 card and they getting, a part-time money, we need to teach them the steps for velocity banking because it's going to teach their kids. Because again, we wasn't given this. We were given things like your cash was king and all that BS that we end up losing, or we always stay behind, or we always struggle or living paycheck to paycheck. So you have an opportunity to not only learn and implement, but also recycle and give it to somebody else.
That's right.
Hey, Al, speaking of last names, I got somebody want to speak to you, man.
Okay. And everybody is about to pop in. This is my sister.
Everybody.
She's been doing velocity banking too. That's my sister. That's my sister Danielle. All right, so I guess we're done here. Nobody got any questions? I know. Okay, I did get you. I got your message. Sandy, I got your message.
Yeah,
Say that
No,
again.
thank you so much, Sabur, for your time.
Yes, ma'am. Thank you.
I appreciate
Take
that.
care. Take care.
Thank
Have a
y'all.
fantastic evening.
Okay. I'm gonna probably do another one next week if you're available.
Next week?
Yeah, I scheduled it for every week on Friday at the same time. That way, people can bring in their own case studies. They can submit them to me, and we can.
Oh, I thought you said every month, but now every week?
If you want to do every month, I can do every month. I just want people to drop in because even if you're not here, share the information because they're going to be different case studies. Share the link with other people that are going to need it. Other investors that that's looking to boss up, basically.
Sounds great. All right. Thank you so much for.
All right,
Sabor, I have some young people that I'd love for you to share this with as well.
Yes, ma'am. Yes, ma'am. Anytime.
All right.
By the way, Rosie, nice to see you.
You too, Asha.
Oh, we spoke on the phone the other day.
Yeah, we did talk on the phone, but we didn't see each other actually.
Okay,
So that's
how
so
was-
nice to put the face to the voice.
So how was it? How did the conversation go? Was it good?
It was amazing. Rosie and Renee, they were just keep repeating to me that, God sent Sabor. Sabor is the best in the whole world. So
Oh, thank y'all. Thank y'all.
when I was speaking with my girlfriend, also the investors, this is what I told them as well. So
Okay.
they were really happy.
Well, thank y'all for that. All right. Well, have a
Absolutely.
wonderful night. Nanette, you going to call me or you want to stay on?
I wanted to stay on.
Okay, I'll
Sabor.
stay on.
Bye.